Welcome back. I'm Pratap here. Today is 31st May 2024. This is a very important video. In this video, apart from the high liquidity zone analysis, I also would like to explain the techniques for achieving the RR, because some of you are getting opportunities and you are missing the opportunities. After that, the opportunities are giving you good profits. Just because you are not following the RR, the risk reward techniques properly. So that is one of the reasons why I would like to focus on this particular point. And also I would like to teach some techniques, important techniques related to achieving the best target. Target is also very important. Sometimes we get good target, but we exit a bit earlier by not properly anticipating certain things you are supposed to observe in the price action. So let me focus on this. For that, I would like to take the stock Pidilite Industries that we discussed yesterday, because I have observed some of our members are missing that opportunity. Just because slightly you got less RR, but you didn't properly fine tune. How to fine tune, that is what I'm going to explain. That I will explain at the end of the video. Because first we need to discuss the high liquidity zones generated in our yesterday's report, and in today's stocks also some of the concepts will help you how to achieve the best return. The target. Sometimes the target, what level you need to set, you might be having some confusion. For example, sometimes we achieve type 2 level target, sometimes we will achieve a type 1 proximal level target. So when you have to look for type 1 proximal level target or type 2 proximal level target, any techniques are there so that we get best reward. Such kind of points I will explain in today's stocks. So the main goal of today's session is to make you understand how to get the best trades apart from evaluating the high liquidity zones generated yesterday. Even before we get into this, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel, click on this community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. Just click on this link. I am clicking on the link. Now we entered into a playlist, Supply Demand Zone Price Action course. In this playlist, you have all the training lessons are available. You just need to scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in the channel. It will be helpful to you. Each time when we release a new YouTube video, we'll provide an update in that channel. Apart from that, any other important updates also we will provide. Now let's get into the analysis discussion. Yesterday we identified 1, 2, 3, 4 high liquidity zones. Pidilite is yesterday's stock that I kept it for explaining our RR related concepts. But the high liquidity zones generated yesterday are 4 zones. One is from daily high liquidity demand zone. Remaining 3 are high liquidity supply zones, 75-minute supply zones. Out of these 4, we got trades from 2 stocks. We got multiple trade opportunities, but we discuss. Some opportunities we rejected, some opportunities we have taken. IndusInd Bank has given 2 opportunities. We took both the opportunities. HDFC Bank has given 2 opportunities. We rejected one and we took the other opportunity. Alchem price entered into the zone, but we didn't take the trade. Why? That we discuss. And the Tata Communication, we did not get the trade. So first let's start with the IndusInd Bank, because it has given a very good profits. Couple of trades we got. And this is a 75 minutes high liquidity supply zone. See here you have a rally candle, 3 base candles and a drop candle. So we have drawn these zones. 75 minutes high liquidity supply zone. And this 75 minutes high liquidity supply zone, we fine tuned with 15 minutes time frame. Get into the 15 minutes time frame. Here you have an excellent drop, 3 base candles and a drop candle, drop base drop. And this is a today's price action. See, today morning 9:15 a rally candle is created, drop candle is created, base candle is created, and then drop candle is created. That means one more dynamic zone is created. Where this dynamic zone is created, within the existing this 15-minute zone itself is created. Maybe this could be the high liquidity zone. That could be the reason why multiple zones are getting created from here. That way we can understand, maybe or may not be, but many times such kind of price action we can see from high liquidity zones. But this is a dynamic zone. But this dynamic zone is again part of the existing 15-minute zone. Now we can fine tune to 5 minutes time frame. So in the 5 minutes time frame, we have fine tuned here. This is a ERC candle. That way I am considering leg-in. This is a leg-in, only leg-in, because sometimes we can compromise at the leg-in point of view. But this is the base candle and this is the drop candle and follow through candle. Okay, here you have a fine-tuned 5-minute zone is available. Apart from that, today in the dynamic market, this is the one created today. Again, drop, base, drop. Now what I did, I adjusted this entry. Actually, you can draw a zone like this. Drop, base, drop. Prices came a little out of this fine-tuned area, fine-tuned 15 minutes. So can't we draw a zones like this, you may ask. We can draw, nothing wrong. We can pick up the trade like this also. But we know that in the fine-tuned areas, the strong order flow will be there. So that's why if you want to minimize the risk, please listen my points carefully. If you want to minimize the risk some extent, up to this 5 minutes, up to this 15 minutes fine-tuned area, you can adjust this 5-minute zone. Earlier it came a little out of that. Yes, little out if we can accept. I'm just telling you, in case if you want to minimize the risk, this is the technique you can use. I'm not saying that you have to use this technique always. Sometimes what happens, prices may not enter into this just before where the actual entry is there. It will touch and it will go down. That possibility is also there. But many times definitely the prices will enter into this exactly 15 minutes fine-tuned area, and from there it will pick up the order and it will come down. See, anything you can use as per your risk management, you are allowed. But both sides you have advantages and disadvantages. Advantage is your risk will be minimized. Disadvantage, sometimes you may miss the entry slightly. Prices may go little and then it will come down. Got it? Okay, anyway, today prices entered into this area. Because it is entered, we are saying, okay, it is a successful trade. If it doesn't enter, that risk is there. That's why you do. It's all depending on our risk management, how much risk you can accept. Those who cannot accept the risk, you have to do like this. But disadvantage, sometimes you may miss the trade. If you miss the trade, okay, miss, no problem. Anyway, you can't take the trade if you can't fine-tune because the risk is more than your accepted level. Anyway, you will be rejecting the trade. Instead of that, if you adjust to your accepted level and then wait, and if you get an entry, you are a lucky person, right? You get a trade and you get the opportunity. So this is what you should understand. Okay, this is how we fine-tune the zones. This is the dynamic one during the live market. But before the live market, we got the entry. So here at 9 o'clock 35 minutes candle, prices just entered into this zone. Our entry is triggered. And what about the target? Everybody please listen. Target is a very important discussion now. Many times you have seen we are using different types of achieving. See here, we have a drop, 2 base candles, rally candle. Does it reach our target? Yes. You may ask, what is that inside? Again, a fine-tuned area. I will come back to that after some time. First focus on the 15 minutes. We have a drop, 2 base candles and a rally. See here in this candle, we got the entry. After that, prices, this fine-tuned 5 minutes area pushed the prices down, prices coming down. While coming down, one more fresh 5 minute zone is created in the live market. So this is the dynamic entry. Recently in our training lessons we discussed dynamic entry in our lesson 21, the last part of the video. So we got a new entry. Maybe next time when prices retraces, we get a trade in this. Up to that, forget about this. Now prices are coming down, again coming down. In this 10 o'clock 15 minutes candle, it reached the 15 minute zone and achieved our target. This is the way IndusInd Bank has given 8,300 rupees profit, which is 6.2% return on the investment. That means we have achieved our average intraday ROI. We have achieved 6.2% ROI. So it's an excellent trade, no doubt in that. Everything is perfect here. Now some of you should ask me a question. What is that question? You should ask, sometimes you are using type 2 15 minutes as our target. Sometimes you are using type 1 proximal as a target. In general, we use type 1 proximal, no doubt in that. Always we give first priority to type 1. Sometimes even I am using type 2 also, like this. If this is the case, today prices didn't reach our target. Just before itself it's gone. Why you didn't use a type 2 target? Why you are using only type 1 target today? Is it because the price achieved this level, that's why are you using this? This is the way you may ask the question. Or what is the criteria you follow most of the times? Many times. See, many times I use type 1 to, type 1 proximal target only, many times. But I am sure sometimes type 2 proximal it will achieve. I will use a type 2 target, type 2 proximal target. Even yesterday also, couple of stocks I used. Type 2 proximal target. Type 2 proximal, if they reach, we get more reward, right? But if they don't reach, we will be missing it. Again, prices will be moving. Somewhere in the middle, we will exit. That way, our profit margin will reduce just because we compromised at type 1 and type 2 levels. See, the first point you have to understand here why I have used type 1. See the zone, the width of the zone. The zone width is very big. We don't know where the real order flow is there. That way what I do, simply I go to lower time frame, 1 minute time frame. And I draw 5 minute zone. We have a rally, base, rally. Generally, this is a fine-tuned zone. Fine-tuned zones are very powerful, that is what you know. Fine-tuned zones are having better order flow compared to the normal zones. Normal zone means you have a 5 minute zone which is not inside any 15 minute zone. But inside the 15 minute zone, a 5 minute zones will be having real order flow. Now I have drawn rally, base, rally. Now I go back to the 5 minutes time frame. Now I will check. If I draw type 2 proximal, 5 minute zone is there. Outside this, that means there are higher chances to achieving this target, this type 2 proximal target. So what is the best? Go to type 1. Now what I do, I go and delete this 5 minutes. So when I am explaining you in the classroom, I will be showing you, okay, now it achieved your target. You will also feel happy by seeing this. Okay, it achieved target, gave you 6.3% ROI, 6.3 or 2. 6.2% ROI it has given, excellent trade, that way you feel happy. But you never get it out. Why I used type 1 proximal here? Sometimes why I am using type 2 proximal? Such kind of things you should get in your mind, doubts. So this is the reason. The reason is this 5 minute zone inside, probably it will stop prices to enter. See today, prices just about to enter, maybe 5 minutes before, and then again moved up, again came down. See, from 15 minutes only it is holding. See, when there is a lot of strong order flow, it will not let you. And moreover, this is a sideways trade setup. Actually this one. When in sideways trade setup, you get even long opportunities also. See, in this candle, we got a long opportunity. because generally what we do, we take type 2 entry point of view, type 2. See, let me draw type 2 entry. See, in this candle, prices entered. If you would have gone for a long trade, probably you would have got another how much? Another 4,825, 5,000 rupees profit you would have got. From here to here, 5,000 rupees profit you would have got. Because this is the target, because here you have a 15-minute zone, newly created 15-minute zone is there. See here, we have a rally, base, a drop. So this is the one. See, this is the entry, this is the target. See exactly how it reached. You would have gained another 5,000 rupees profit, because from here to here, a little over 5,000. Maybe it is 6,000 or even 6,000 also, not 5,000, even 6,000 or 7,000 in between, you would have got the profit. It's a good profit. So earlier we exited here, the high of this zone. While exiting, you got 8,300 rupees profit. But entry you have taken. This time you have taken entry inside this 5-minute zone here. But instead of reaching, you exited here. That's why maybe you would have got around 7,000 rupees profit. If you would have taken the sideways setup, the advantage is it will give you opportunities in both sides. But the danger is finding the extreme levels is very, very, important. People should be very careful. Sideways market, see lot of movement. See here, came down, see the swings. You will be forming, the swings will be forming lower lows, higher lows, combinations. It looks like you got a short opportunity here, you got another short opportunity, okay, by seeing the price action. But in the live market, you may not be knowing this is the short opportunity. Because price action is completed, you will tell. That's why extreme levels only you have to take. How do we identify extreme levels? Because inside the 15-minute zone, the fine-tuned 5 minutes areas, you can identify the extreme levels. See here also, this is the 15-minute zone. There you identify the extreme level. That way we are planning the extreme levels, we can plan. Definitely this is a good long trade. Those who are following sideways market. So far I haven't explained you sideways trade setup. This is one of the lessons in the advanced trainings. Maybe after maybe 1 or 2 months you will be learning this. But meanwhile I am giving you overview, some indication, so that you will get some awareness by the time when you learn. Once you get the initial awareness at the time of learning, you will learn in a perfect way. That's why for the first couple of weeks, not couple of weeks, maybe 1 week, for the first 1 week onwards, I've been talking about this sideways setup. In the previous HLQ analysis also I have explained. I also put that video in the important videos. Even I will keep this video also, because it is important, because many of you should understand these techniques, because I am not going to explain these techniques again and again every time. So this is a sideways trade setup, long trade. You would have got another 6,000 to 7,000 rupees profit. This is a rally based drop. Here you would have exited. And now here again you have a fine-tuned 5-minute zone. Within this area, rally based drop. This is the one we've been talking about. Drop based drop. We just fine-tuned and adjusted to the proximal of this 15 minutes zone. So here we got an entry, and then finally it reached this. We have a drop based rally. See, this is looking like a 5-minute zone, right? But this is also a 15-minute zone. So this is a leg candle, ERC candle. You have a base candle, and then you have a rally candle. Excellent. So finally prices reached here. Maybe this is violated. Why it is violated? Because we are in sideways trade setup. So extreme levels only we have to take. In between zones will be violated easily. Okay, fine. So how much profit we got now? ₹4,825, which is 3.6% ROA. So total 9.8% return you got only from IndusInd Bank. This is the dynamic trade. Dynamic trade means during live market zone is created, again retrace it to that zone, we took a trade and it reached the target. See, it came very close to this 15 minutes target. Actually, this is the main horizon. All these are all small 15 minute zones only, but in between, in the sideways trade setup, they will be created, they will be violated. Such kind of things will happen. Again, this 15 minutes, you may think the trend is changed because it is changed. So immediately, again this zone, 15 minute zone here is violated, again trend is changed to sideways. Such kind of things will happen. See, rally base drop, 15 minute zone, this is violated. In sideways market, you see like that. That's why sideways market, instead of zone violation trend, the pivot trend is much powerful, especially in sideways market. The higher high, lower low, because that will accurately will tell you. Why I am not saying zone violation trend is not accurate. Many times 15 minute zones will be violated, again they will be respected, again they will be violated. One demand zone will be violated, supply zone will be violated. Every time it looks like trend is changed to uptrend, again change it to sideways, again change it to downtrend, again change it to sideways. That kind of things frequently will be seen. Such kind of changes you won't see in the pivot trend, higher highs, higher lows, lower highs and lower lows. Of course, equal highs and equal lows. In the trend, more accuracy will be there. See, every concept is having its own advantages and disadvantages. Once your experience grows, you will understand all these points. Now you guys learn all these points, sometimes you may get some confusion. So learn the concepts one by one. Now whoever is learned, now you are all practicing the concepts. That means you are now gaining your experience slowly. At least these high liquidity zones, everyday analysis videos will help you. These videos looks like we are focusing on the trades from yesterday's. No, it's not that. That is only one part. The main part is learning. Any interesting things I observe in the price action, it gives me an opportunity to teach you those concepts. That's why many high liquidity zone analysis, lot of learning will be there. But many people are not realizing this point. Okay, this is about Indus Ind. Next one is hoping from this explanation you are able to understand how exactly I am using 15 minute zone for achieving the best target. Sometimes I am using 15 minute zone week to week, sometimes 15 minutes zone week to higher body if it is a demand zone, or lower body if it is a supply zone. So today we got 2 successful trades from Indus Ind Bank. Next one is HDFC Bank. HDFC Bank is also a 75 minutes zone drop, 1, 2, 3, 4, 5 candles. Then again a drop candle with hidden body. And this zone we fine tuned with 15 minutes time frame. Here you have a 15 minute zone. You have a ERC candle as a leg-in. You have a base candle and then you have a drop candle, leg out. Leg out is not very great, but okay. Why I am considering this leg out, let me tell you. Because here a lot of high liquidity I am seen here, especially when I fine tune to the 5 minutes time frame. Now let me go to the 5 minutes time frame. So here we have a rally, 2 base candles and a drop candle. So this is the 5 minutes fine tuned zone. Prices came down, see again rejection, came down, huge rejection. This rejection indicates there is a strong order flow. After that prices came, again came down, again went there, again came down, again went there, came down, and completely it is holding the prices. Again rally, base, drop, again a new zone is created from the 5 minute zone. Probably such kind of price action you see if this is a high liquidity area. Now prices came down, came near and again came down. And see here, again prices entered and a huge rejection, and then prices came down. Again prices came down and reached this zone, okay, with this maybe some 5 paisa, 10 paisa, definitely you would have got a trade on this zone on this particular day. It might have given you some good return up to here. That is yesterday. And then prices came down. But here you can observe one interesting thing. Yesterday's price action, we have a ERC candle, you have two base candles, and you have a leg out candle. So obviously I have to draw a zone like this, 5-minute zone. We have a drop, base, drop. Now what I did, I fine-tuned to type 3 level. Actually this is a type 3 proximal. You may ask a question, why type 3 proximal? Because this is the area exactly fit into the 15-minute zone. But what will happen, there are higher chances you may miss the trade. That possibility is also there. It's up to you whether you can draw a zone like this, or you can draw a zone like this, or you can draw a zone, everything depending on your risk management. Please remember. But generally, lot of order flow will be here, sometimes may not be having also. Sometimes, because you see the risk is very minimal, it is a possible that the zone will be violated, that possibility is also there. That's why I want to confirm any order flow is there or not. So what I did, I went to 1 minute's time frame. I just checked whether there is any order flow in that area. I don't want to fine tune, because fine tuning up to 1 minute level, many times we miss the trades. So here I have seen a rally, here I have seen a base, and then I have seen a drop candle. That means order flow is there. Order flow is strong. Why? See here, the move. Slightly picked up and moved down. Maybe at the time institutions might have added new order flows. We don't know. Anything will happen. This is 1 minute level. Because we are not analyzing at 1 minute level, we have to up to limit to 5 minutes. That is the high liquidity zone strategy. Just to confirm whether order flow is there or not. Definitely there is a good order flow. Only thing is we may miss the entry. If we don't miss the entry, we get a good trade. Why we are fine tuning up to, so that this will be within this exact. You may say, no, I want to plan a trade like this. You can plan, nothing wrong. This is also you can take. Even this is also you can take. Two base candles, right? So you can fine tune to one base candle, or you can fine tune to type 3 proximal entry. You have all these techniques. But today it picked up the orders from here, that's why I am showing you. If you would have drawn a zone like this, your trade will be like this. Only slightly some of your profit margin will reduce, but still your RR will be good. You have a very good RR from here to here. Even like this also you can draw the zone. This is also valid, including all the two base candles. If you want wick to wick also you can draw. Where is wick to wick? Okay, this is almost wick to wick, but slight difference. This is also you can draw, you can take a trade, wick to wick trade. I am just telling you the techniques, how you can do if the risk is not within your accepted limit, and confirmation that there is really order flow when we minimize or not. Sometimes we will take the help from 1 minute, but remember 1 minute is not a strong measurement criteria for high liquidity zone strategy. Just to build our confidence, that's it. To support our decision only, we are using 1 minute. Otherwise, we don't look into 1 minute time frames in high liquidity zone strategy. 1 minute doesn't work. Fine tuning up to 1 minute doesn't work in our HLQ strategy, because mostly prices won't go up to 1 minute level. They just touch 5 minutes and go down many times. At type 2 proximal, they touch and they go down. Rarely we see type 3. Today, why I have fine tuned is type 3 also it will work. Why if type 3 is having order flow? To confirm, I will show you in the 1 minute there is a order flow. Those who have taken type 3, they would have got a big, more margin. Just I want to convey that message. But I am not telling you how to. And also I am using a reason, justification, why I am doing, so that my zone is exactly fit within this fine-tuned 15-minute zone. See, this entire zone is high liquid, 75. Inside 75, you have a 15 minutes. Now, within this 15 minutes, this small fine-tuned type 3 proximal is there. But some part in overlapped with 15, some part is overlapped outside the 15 is also allowed. It is also allowed. But many times we have experienced prices will be entering into fine-tuned 15 minutes area, and then from 5 minutes time frame it is picking the orders many times. Sometimes slightly before entering into the 15 minutes when there is a overlap outside the 15 minutes. I am talking about that scenario only. Don't generalize this concept. When 5 minutes is overlapped, some part is outside. Sometimes it will pick up from outside portion and then again go out. They will not go inside the 15-minute portion of the zone. Sometimes. But many times you see, prices enter into 15 minutes, pick up the orders and go down. That's why it's all depending. If risk is not allowed, at the time you use this kind of technique. This chart anyway, risk is supported even if you draw like this. Even if you draw like this. You may ask a question, this is already tested zone. Do we need to consider? Yes, because this is only rejection in the next candle. Most of the times rejections from the next candles will confirm. But after that again prices go down some extent, again come up, picked up the orders, then it is a doubtful about that zone. That's why by seeing this only, I went to the type 3 proximal entry. Because already it picked up some orders here. But from here, is it going to work or not? For that I confirmed from 1 minute zone, and also this leg out also give me a clue. See the leg out, the wick. That means this is the area the real order flow is there. That way I confirm. So if you go with this, definitely prices will come up to here or a little before. Even if you keep some buffer also, you get the trigger. But anyway, today I just entered. Definitely you will keep some buffer before this and you take a trade. And finally reach the here one important thing is 15 minutes target is missed. It didn't achieve 15 minutes target. Let me show you. We have a drop base rally. You can't consider this as a drop base rally because this is a ERC candle. But why I have drawn this zone and exited here? This is a 1 minute zone. Actually 1 minute high liquidity zone. That's how do we know it is a 1 minute? After the price action only I confirmed. Because NeoStock software also does not support 1 minute time frame. It supports, but I didn't enable 1 minute because 1 minute processing takes several hours of time. That's why I limited to 5 minutes level only. If I limit to 5 minutes, now it is taking it is taking 10 to 11 minutes time nowadays for processing the data. Earlier it took 8 minutes. Now data is growing. Now it is taking 10 to 11 minutes in between it is taking every day while processing the data. If I enable 1 minute, definitely it will take 2 to 3 hours for processing all the time frames. That's why I limited to 5. Anyway, even software also cannot find because the data is not enabled. Manually we can tell. Why? This is how can I say this is high liquidity area? Already several tests is one criteria. This is the first test. Maybe this is the rejection part immediately. This is the second time picked up. Now see, drop base rally created. When it will happen? From high liquidity area only new zones will be created. Again you see, drop base rally ERC candle. Again you see, drop base rally. So by seeing all these things, you have to take a decision. Definitely this is the first time. What I will think this zone will be violated maybe in this test or next test. But by seeing the price action, new zone is created. Immediately I should alert myself. Maybe this is a high liquidity area. If that is the case, it may not allow prices to go down. I have to take a decision. In the next retracement, I have to exit. Still if I am thinking, okay, let me wait for some more time. Again see here, it created again drop base rally. Here itself, I should take a decision. Even if I miss, next time when it came, I have to take a exit criteria. See, again it picked up and moved. Last time it gave you opportunity. If you don't exit from here, definitely it is like we are wasting our time. Because it gave you so many, enough clues. Several clues. See the number of tests, several tests. This is the first test, second test, third test, fourth test. Again here, fifth test. Again, this is the last time, sixth test. If you are waiting these many times, how much time you will be wasting here? Still you believe, no, it will be violated. Definitely it will teach. At least you should use trailing stop loss. If you are using trailing stop loss somewhere here, your candle will be, this is the ERC base drop. When it is violated, at least here you should have exited. Somewhere here. If not this, at least your rally, 2 base candles drop. At least you should have exited here. But how much profit margin you are losing? Instead of exiting here, now you are exiting here. If not here, you exited here. How much money or how much profit you will be losing? First of all, exit after confirming this, it is a high liquidity. Confirming means at least 80% level. I'm not saying 100%. This, see, for me, if this is the first clue. High liquidity area, again and again new zones will be created. Still I want to test, this is my second clue. And number of tests also several times. At least I would have exited either here or here. Worst case scenario, worst case, not best case. Worst case scenario, I would have exited here. This is the last opportunity. But mostly I would have exited either in this candle, because this is the one give me some doubt, because this is an excellent drop based rally. To confirm this could be a high liquidity. If that is the case, I would have exited here. If not here, again one more. At least last scenario or even in this scenario, I would have exited. To confirm it is a high liquidity area. It gave us several opportunities to exit. So that's why I'm considering my profit margin up to here. In case, if not this, you would have used a 1 minute trailing stop loss. Once prices entered into this area, testing several times, one of these levels you would have kept. Even here, if you would have kept a drop base drop, you would have exited here. When it is violated, at least you would have got a decent profit, rather than prolonging up to here. See, such kind of things you have to observe in the price action sometimes. When prices are struck up within 1 minute area, at some point you need to check whether there is any high liquidity area is there. And this is the way HDFC Bank has given you 7,837 rupees profit and 5.2% ROA you would have achieved. Because see here, after that the zone is violated because it is a fine-tuned area. But above we have one more zone, the high liquidity zone. This is the high liquidity 5 minutes. If anybody would wants to take a trade, you would have got an opportunity here. But this is the last 30 minutes opportunity. Last half an hour we won't trade. Still any crazy trades you want to do, the target is 5 minutes. See, you have a rally, base rally. This is the only immediately available 5 minutes demand zone. You would have took an entry here. You would have exited in the last candle of the trade. Definitely it is not an intraday trade. Intraday we won't trade in the last 1 hour, right? But still some people wants to take trades, risk and take trades. Still you would have got profit today. Whatever the value, calculate. I'm just telling you. See here, our goal is to test the performance of our high liquidity zones. Whether you have taken the profit or you have not taken, or whether you have taken the trade, not taken, that is not important. How these zones are working at any point of time during the day. Sometimes they will fail. But during last minute we won't take trades, we will be lucky for that. But anyway, I am not capturing this data in the Excel sheet. But just to tell you how the high liquidity zones are working. And the next one is Alchem. This is a daily high liquidity demand zone. We have a drop base rally, price closed inside the zone. You may ask why we didn't fine tune. That means 75 minutes zone structure is not good. Look into the 75 minute zone. We have a drop, 1, 2, 3, 4, 5, 6, 7, 8 base candles and a rally candle. So anything above 6 base candles we don't take trade. That's why this is not a valid zone. So that is the reason why I didn't fine tune this zone. Maybe tomorrow if further prices go down, this zone will be violated. Today last hour prices came here. And the last one for today's trading session is a Tata Communication, but after that I will teach you this technique in Pedilite. Don't think this is the end of the session. We have a drop, base, drop. This is a 75 minute zone. This I fine tuned with 15 minutes time frame. 15 minutes also, see here rally candle, 1, 2, 3, 4. Drop almost 75, 15 minutes are same. Now go to the 5 minutes time frame. In 5 minutes we have 2 order flows. So this is the ERC candle, 3 base candles and drop candle. But from this zone already orders picked up. Prices came, moved up, picked up the orders, so we can't plan a trade in this zone again, because it is a tested zone. But here again drop base drop is created. We have a fine tuned 5 minute zone, fresh zone. The one below may be valid for your trading point of view. But today prices did not reach, so we didn't get an entry. Okay. Now Pedilite, one of our members asked a question regarding, because he didn't take the trade Pedilite yesterday because he didn't find 1:3 RR. Actually there is a good 1:3 RR. This is a rally, 2 base candles and a drop, 75 minute zone. So how I fine tuned already explained in yesterday. So directly getting into the 5 minutes time frame. Here we have a 5 minute zone. We have a drop, 3 base candles and a drop. So this is the tool. You know about short position tool. This is the one. Long position and short position. Because we are going for a short position. See here what I did, I set the stop loss. Because we have a 1.95 stop buffer is there. So I added that 1.5 stop buffer. So this is our stop loss. Entry, you have a maximum scope up to 0.1%, 0.1%. You can add entry buffer. But there is no rule that always you have to add 0.1. Don't fix it. That is the mistake people are doing. Let me repeat. Why you people sometimes missing your RR is because you are fixing that 0.1. 0.1 is maximum allowed. If you are not getting enough RR, you can reduce that. Still you are not able to reduce one, you can keep within your proximal type. Even if you are still achieving, go inside, deep inside and you achieve. If prices reach, then only you take. Otherwise don't take the trade. If trade is missing, anyway if you don't take the trade, your trade will be missing. Right? At least if you adjust and keep yourself, if luckily prices entered, you will get a trade. If it is successful, you get a good profit. That is how you have to plan. Blindly you cannot reject in the initial stage itself. You know the statement, something is better than nothing, right? That something is adjusting the proximal entry is something. Luckily if you get a profit. If you simply reject, anyway you won't get profit at all because you don't take the trade. And RR and target. Target I achieved, I set in this example, I set to whatever our member selected the target. See, I have drawn a zone like this, drop base rally, 15 minutes. And what he is saying is I want to consider this rally base rally. Why I didn't consider this rally base rally, I will explain. Still I want to. Let us assume. See, exactly I adjusted to that. Type 1 proximal. Actually, I didn't select even type 2. Type 2 means this is the one. See that my tool and this entry, there is a gap is there. Are you seeing the white color gap? That means I am considering even week to week. Why I am considering even week to week? Just to tell you, even then I am achieving the RR. See now what is RR I got? 3.03 RR I got. Did I get the entry into this? Yes, in this candle. Go to the 1 minute candle. It just crossed a little above my entry. At 9:19 candle, trade is triggered. The trade is triggered. And came down and finally reached the target. Okay, what is the mistake you are doing? The mistake you are doing is you are always keeping 0.1% or entry buffer, 0.1% entry buffer. What is this entry, actual entry? 3046. Into 0.1 divided by 100, 0.1%. So 3 rupees 1 paisa or 50 paisa. So let us say 3 rupees entry you can keep. So 3 rupees entry means what is the value here? 3046 minus 3 rupees. 3042 rupees. Sorry, 43 rupees. 3043 rupees. Let me draw a horizontal line to get clarity. At 3043. Okay, 3043. Now this is the blue color line. And what you did using this tool, you adjusted up to this 3043 line. What is the RR you got? 2.21% RR you got. That's why you rejected the trade. I am telling you, don't do this mistake. See, today prices went beyond this blue color line. Somewhere here, if you would have taken a trade, your trade would have been triggered and you would have achieved 1:3 RR. That is what I am trying to tell you. Let me expand. What I am telling, just move the line up to when you reach 1:3 RR. See, the moment I move up, now what is the RR? 2.43. Further move my entry up. Now I am achieving 2.5 RR. Further move up, I am achieving 2.85. Further move up, achieving 2.93. Further move up slightly, 3.01 I am achieving. And what is my entry here? 3044.75 paisa. 3044.75. If my price reaches to this level, then only I take trade. Otherwise, I don't take trade because I am not getting 1:3 RR. This is the way you can think. See, sometimes you can take 1:2.959, 1:2.9 or 1:2.88. Okay, that level you can compromise 0.1% or 0.2%. But anyway, even exactly 1:3 also I am testing, so that you understand the reality. So my entry is 3044.75. But what is the high of this candle? 3044.90. That means 15 paisa before itself I got the entry. Market went beyond 15 paisa above my entry. I achieved 1:3 RR. My trade is triggered. And finally I got the profit. How much profit I got yesterday? Pidilite Industries, we got 6,337 rupees, which is 4.7 RR. I calculated the maximum because what is the maximum opportunity our HLQ zone will give? maybe you would have got 6,100 rupees profit, or 6,200 rupees profit, or worst case 6,000 rupees profit you would have got. Anyway, few hundred difference. You got a good profit, right? But simply you didn't adjust your entry, you fix it to the blue color line, you didn't have RR, you got only 2.28% RR, you simply rejected the trade. And that too you got the RR with 15% wick to wick target. See here, the target I have drawn is wick to wick, rally, 2 base candles and a rally. That wick to wick target, still we achieved 3% ROI. Sorry for my mistake. 1:3 RR. We achieved 1:3 RR, even if you are drawing wick to wick. And 15 paisa before the high of this price, we got the entry. It could have been a successful trade for you yesterday. See, that is what I am telling. Opportunities you won't get every time. Today we are lucky. At least our software is providing some stocks. Maximum returns we are getting. When software is giving you, we should carefully do our analysis. Just like that, we cannot quickly finish the analysis. All these points you have to observe. Maybe this is your learning stage. You make mistakes, but from these mistakes you will learn. But same mistake if you are repeating again and again, you have to seriously think about your analysis. Concentration should be there completely on that. Because I remember same point you made the mistake earlier. Earlier also I explained this technique once. I remember. I didn't exactly remember the stock name. Maybe it is a Wipro or ABFRL. One of the stocks. We did similar analysis earlier. At the time also, I clearly told this point. You need to adjust the entry buffer until you achieve RR. Sometimes we adjusted our entry inside the zone itself, because we want to take trade only inside up to whatever the fine-tuned area is there, that level. Because let me draw my blue color. Let us assume my blue color is entry. My entry. Sometimes if I place my blue color line here, let us assume, then only I get 1:3 RR. At that time, keep your blue color line. You may ask a question. There is a higher possibility that prices just touch this line, the type 2 proximal, and it will go down. We will be missing this trade. Anyway, you are rejecting the trade. This is the point you have to observe. Anyway, you are rejecting the trade. So why can't you open the worst case option for you? This worst case scenario could be a best case scenario. If prices enters here, it will be a lucky trade for you. And after that, if prices go down, you get a good profit. Let us assume if it is violated, still your risk is minimized here, and you lose a very small amount of the margin, small margin amount. That's it. If you reject, anyway you won't take this trade. If prices did not enter into this blue color, anyway you will be missing. Anyway you prepared for not taking the trade. So there won't be any sadness for you. But assume lucky scenario, in a lucky scenario, prices touched the blue color line and you got the entry, and after that it came down. Still you will be in profit, right? You would have got a profit. The trade which you want to reject, that gave you profit. That is what happened. The trade in this blue color line where you fixed, this is your entry, and you calculated your RR based on this blue color line, and you got 1:2.8 and you rejected the trade. Instead of that, you would have shifted this blue color line up to here. Now you got 1:3 RR. See here, 1:3.01. Now in this blue color line you would have got, and yesterday prices just crossed the blue color line. That means your entry is executed. After that you will exit here. Hope you got clarity, right? How you got? That's why I'm telling you people, make use of this tool. The long position and short position tools. And with the help of this tool, you can adjust your entry until you get your RR. See, 1:3.01 RR we got. Now prices reach, I will take this trade, otherwise I won't take this trade. That way you have to prepare. Yesterday it gave you excellent 1:3 RR. Okay, now next question. Why I am selecting my RR instead of rally base rally? Why I selected here? This is the question you might be having, a doubt. Already expressed this doubt. Why I have taken this? The reason is very simple. I identified this as a high liquidity area. Based on several number of times prices coming here and see here again moving up, see here again moved up, again created. From here only the zone is created. So I have confidence that definitely prices will reach here. Because of this, probably slightly my margin will increase. Profit margin. A few rupees extra, that's it. Nothing. See, between this rally base rally and the one I have drawn, there is no much difference. But anyway, still I am telling you why I have given importance to this is the main origin for the 15 minutes. Remaining all are supportive, part of this. Because they are part of this, I have included. Let us assume this entire zone is outside this high liquidity zone, then probably I would have given priority to this zone. Because it is part of the high liquidity zone, I have given highest priority to this high liquidity area. Many times prices get into the high liquidity. But in this candle, this high liquidity zone finally violated here. That is a different story. There is nothing special why I have. See, this is the extra profit I got because of this. See the gap you are seeing, right? This is the extra profit we got. Hope you got clarity. Hope you will not repeat these mistakes. You means all you people, whoever is making these mistakes. The thing is, only few people who really wants to learn, they are expressing their doubts. People with some fear or some shyness, you are not expressing your doubts. Those who are not expressing your doubts, you won't learn the concepts. Without fear, those who are expressing, they always learn the concepts. Because I am responding when you are asking genuine questions. But please remember, don't forget this time. Because this is a very important technique. Already explained a couple of times earlier. Anyway, and this video I will keep in the important video session so that the reference will be there. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.